How to Become a Crypto Millionaire by Kevin O'Leary. In recent years, Shark Tank's Mr. Wonderful has become a big crypto advocate. Having initially dismissed the whole shebang, Kevin O'Leary first bought Bitcoin, BTC, in 2017. Since then, he's fully embraced the world of blockchain. So much so that the WonderFi app is named after him. And he's got around 20% of his operating capital tied up in crypto. O'Leary approaches crypto like he would any other investment. He believes it will eventually become the 12th sector of the economy, and he's decided to treat it that way now. That doesn't mean going all in on cryptocurrency. It means ensuring crypto is part of a balanced portfolio with a mix of sectors and specific assets. O'Leary recently tweeted, "Opportunity exists when you are diversified with your investments. That's how you're going to win big when investing in crypto." Why O'Leary believes diversification will help you win big, whether you're investing in crypto or any other asset class. Having a diversified portfolio means you won't be knocked sideways if one particular investment doesn't pan out. Moreover, as the seasoned investor points out in a recent social media post, "I don't need them all to win. I just need a few of them to win." That's what diversification is all about. He continues, "My strategy is to do the same thing I do with stocks, diversify." There are a lot of parallels between cryptocurrency and the early days of the internet, which suggests that many projects will fail while a handful could go to the moon. It's still very early days, making it difficult to know which coin or token will become the next Amazon or eBay. With over 20,000 cryptocurrencies out there, investors still need to do their research. Look for cryptocurrencies with utility and strong leadership teams, and consider diversifying within a particular segment of crypto. For example, I am a big fan of smart contract cryptos, because they are the framework on which many other crypto projects get built. Ethereum, ETH, is the biggest crypto in this segment, but it struggles with high gas fees and network congestion. So I own Ethereum as well as several Ethereum alternatives. It isn't yet clear which one will come out ahead. Building a diversified portfolio. Mr. Wonderful style. To build a diversified portfolio, start by thinking about what percentage of your investments you want to dedicate to crypto. O'Leary began with 2.5% and steadily increased his exposure. Many financial experts suggest putting no more than 5% into crypto, while others stretch that figure to 10%. It all depends on your attitude to risk and the amount of time you're willing to spend researching and understanding the crypto market. We found one company that's positioned itself perfectly as a long-term picks and shovels solution for the broader crypto market: Bitcoin, Dogecoin, and all the others. In fact, you've probably used this company's technology in the past few days, even if you've never had an account or even heard of the company before. That's how prevalent it's become. O'Leary says the way sovereign wealth funds work is to put no more than 20% into a single sector, and he includes crypto as a sector, and no more than 5% into any specific stock or bond. He's following that same model with crypto. Mr. Wonderful, who is the chairman of O'Shares Investments, says he owns positions in 32 different coins and tokens. He told the Bankless podcast a few months ago that his largest holdings are in Ethereum and Bitcoin, which mirrors the approach of a number of successful crypto investors. Combined, these two crypto giants account for almost 60% of the total crypto market cap, giving them more liquidity and a better chance of long-term survival. O'Leary also owns Polygon, MATIC, a Layer 2 solution that's focused on improving the performance of Ethereum. He is also a fan of Solana, a speedy smart contract crypto that shot to fame last year. Diversification isn't the only secret to crypto success. Diversification is an important skill for every investor. If you're investing in a high-risk asset like crypto, controlling your exposure can help you manage the risks and reduce the impact of volatility. The last year has shown us how dramatically crypto prices can fall, and that even high-profile projects can collapse completely. In addition to building a balanced portfolio, it's also important to only invest money you can afford to lose. This is a relatively new and unregulated industry, and there's a lot we don't know about how it will evolve. O'Leary can afford to put 20% of his operating capital into crypto, but your financial situation may be different. Make sure you understand the risks, and consider following Mr. Wonderful's example of slowly layering into any crypto investments. Importantly, if the crypto market goes sideways, it won't take your finances with it. How to become a crypto millionaire. So you want to be a crypto millionaire. Here are 9 proven paths to get there. Path number 1. Steal it. Some crypto millionaires got there by stealing it from others. If you have no empathy, strong technical chops, and a knack for hacking. This is the path for you. Just remember, because most blockchains are public, there's a non-zero chance you'll get caught or have the funds you stole frozen. Being the Wild West, there are also legal ways to steal people's crypto, by coding front-running bots, for example. But the competition is fierce. Path number 2. Private sale. If you create your own cryptocurrency, or join a team that's creating their own cryptocurrency, then you'll get a bunch of free tokens that could make you a millionaire once the project takes off. Similarly, if you can wiggle your way into investing in a project pre-ICO, typically only available to VC firms or connected angel investors, your upside will be much higher than normal. Just note that team or early investor coins can be locked for years, so you'll have to be patient and hope that the market doesn't collapse before your payday. Path number 3. Have insider information. You have privileged information that something is about to happen to a coin, good or bad. You could take on leverage and trade ahead of time to make a lot of money. But even this path is risky, because news often doesn't move the market as much as you think it will. Plenty of projects will announce a breakthrough partnership or feature launch only to have their prices fall because of a general market event. Path number 4. Weigh it out. The risk is that crypto does take off, but what you invest in doesn't make the cut, since anything can happen in 5 to 10 years. Path number 5. Massive, concentrated bet here. You bet big on a small cap coin and hope that it beats the rest of the field and moves up the crowded crypto leaderboard. If you invest in the 100 largest crypto and it makes its way to the top 10, you've roughly 20x'd. A 20x would take $50,000 to $1 million. Of course, it's more likely that your rank 100 coin will stagnate there or fall out of the top 100. Path number 6. Medium diversified bet. Instead of betting $50,000 on one coin and hoping for a 20x, you could bet $25,000 on 2 different coins and hope for a 40x on one, or on 10 coins and hope for a 100x on one. That's the venture capital model, where you're betting that one unicorn return makes up for everything else. The only problem is that getting a 20x is hard enough. Getting a 40x or 100x is a miracle. For this strategy, you should pick smaller cap coins, maybe ultra small cap way out of the top 100, since you need much higher upside to get to that $1 million mark. Path number 7. Whack-a-mole method. Very rarely in crypto do you see a 500x or 1000x. I was buying Bitcoin at $250 and Ethereum at $30 and hundreds of coins since. The sobering fact is that betting $1,000 or $2,000 likely won't get you to millionaire status by itself. This path is extremely tempting for newbies, as it sounds much easier than it actually is. You can make $1 million with the method. But what will probably happen is the following. You get a 20x and move to another crypto. That crypto crashes, and the one you sold out of goes up another 3x. You panic and roll the dice somewhere else, and that 2 crashes and are back to where you started from. You helplessly watch your original coin keep going up and realize you'd have been a millionaire had you just held it. Path number 8. Buy big during a massive crash. By massive crash, I mean 90+% drops, like what happens during bear markets, where coins that used to be $1 trade for 5 cents. Buying coins at collapsed prices is like buying distressed real estate in terrible areas. No one else wants them. But if the market returns to normal, they can be lucrative. During the subsequent bear market, the cost of a supernode fell to $1,500 at its lowest point. Had we been bolder, we could have bought 10 supernodes for the price of the one before. We didn't, but it would have made us millionaires during the next bull market. Of course, buying during crashes is easier said than done because you never know how low a crash will go. A coin you like could fall 90%, but then after you buy it, it could fall another 90%. And while some coins recover, others don't. But if done right, this path can make you a millionaire. Path number 9. Already be rich. If you invest $1 million in crypto, you've won. Just cash out right away. This is the preferred method for social media stars who like to brag about their investing chops. To become a crypto millionaire, most paths require that you can't take profits. If you invest $50,000 into a small cap crypto and it doubles or triples, the responsible thing to do would be to de-risk the investment and take out your original cost basis.